When governments step in to save the economy, it sounds reassuring. Headlines talk about stability, protection, and preventing collapse. But what if I told you that behind every financial bailout, there's a bill and you're probably paying it, whether you realize it or not? Stay with me, because by the end of this video, you'll see financial bailouts in the USA and UK very differently than before. Imagine this: a massive bank makes risky decisions, profits during good times, and then suddenly, everything goes wrong. Markets crash, confidence disappears, and panic spreads. Instead of letting that institution fail, governments inject billions or even trillions of dollars into the system. The official explanation is always the same: too big to fail, but too big for whom? And too costly for who? In the United States, financial bailouts are often framed as emergency measures to protect ordinary people. Politicians argue that without bailouts, jobs would vanish, savings would be wiped out, and the entire economy would grind to a halt. In the United Kingdom, the narrative is similar: protect the financial system, protect the country. But here's the uncomfortable truth: while bailouts may prevent short-term disaster, they often create long-term pain that quietly lands on taxpayers, workers, and future generations. Let's break this down in simple terms. Governments don't have unlimited money. When they bail out banks, corporations, or industries, the funds come from somewhere. That somewhere is usually public money, tax revenue, government borrowing, or central bank actions that affect inflation. Even if you never directly see a bailout payment, you feel it through higher taxes, reduced public services, rising prices, or national debt that takes decades to repay. In the USA, one of the most talked about bailout moments was during the global financial crisis. Trillions were mobilized to stabilize banks and financial institutions. While some of that money was eventually repaid, the hidden costs didn't disappear. Government debt increased, public trust eroded, and income inequality widened. Large institutions survived, executives kept bonuses, but many ordinary people lost homes, jobs, and retirement savings. That gap between who was rescued and who suffered is the real hidden cost. In the UK, the story followed a similar path. Major banks were rescued using taxpayer money to prevent a total financial meltdown. On the surface, it worked. The system didn't collapse. But afterward came years of austerity. Public spending was cut, social services were reduced, and wages stagnated. The bailout saved the banks, but the recovery was paid for by everyday citizens through tightened budgets and reduced opportunities. Here is where it gets even more concerning. Financial bailouts create something called moral hazard. When companies believe they'll be rescued if things go wrong, they're more likely to take bigger risks. Why worry about failure when the government might step in? Now think about inflation. When governments inject massive amounts of money into the economy, it doesn't just disappear. You might wonder, if bailouts are so costly, why do governments keep doing them? The answer lies in fear. Leaders fear economic collapse, political backlash, and systemic chaos. In the short term, bailouts can calm markets and restore confidence. But in the long term, they shift risk from private institutions to the public. Profits remain private, while losses become socialized. In the USA, taxpayers often don't see a direct bill labeled bailout cost. Instead, they experience it through growing national debt. That debt doesn't vanish, it's passed on to future generations. Younger people inherit an economy weighed down by obligations they never agreed to. In the UK, government borrowing linked to bailouts has similarly contributed to long-term fiscal pressure, influencing policy decisions for years. Another hidden cost is trust. When people see large corporations rescued while individuals struggle, confidence in the system erodes. People start to believe the game is rigged. This loss of trust can have serious consequences: lower civic engagement, political polarization, and social unrest. A stable economy depends not just on numbers, but on belief in fairness. There's also the global impact. When the USA or UK bails out major financial institutions, the ripple effects reach across the world. Currency values shift, international markets react, and developing countries often feel the shockwaves. Bailouts in wealthy nations can indirectly increase instability elsewhere, widening global inequality. Supporters of bailouts argue that the alternative, doing nothing, would be worse. And sometimes they're right. Letting major institutions collapse can cause massive harm. But the real question isn't whether bailouts should ever happen how they redesigned and who they truly protect. Without strong conditions, accountability, and reform, bailouts become a safety net for the powerful rather than a shield for the public. Imagine a different approach. What if bailouts came with strict rules, limits on executive bonuses, mandatory restructuring, real consequences for reckless behavior, strong protections for workers and consumers? In some cases, governments have tried this, but enforcement is often weak. Without real reform, the cycle continues. The hidden cost of financial bailouts isn't just money, it's inequality, lost trust, reduced opportunities, and a future shaped by decisions made in moments of crisis. In both the USA and UK, these costs accumulate quietly, year after year, rarely making headlines but deeply affecting everyday life. Before you assume a bailout is a rescue, ask yourself, rescue for whom? The answer often reveals more than official statements ever will. If this video made you see financial bailouts differently, make sure to like, subscribe, and share it so more people understand what's really happening behind the scenes. And if you want to dive deeper into how global financial systems shape your life, don't forget to visit the channel for the next video. We breaking down the topics most people never explain clearly.